Stocktwits Nation. It is Wednesday, April 16th. Another day in paradise in the markets. I'm here with Shay Boloor once again. Shay, what's up? How are you doing today?
I was looking forward to another calm day before Easter this weekend, but I think Trump had different plans yesterday with all this Nvidia madness on the licensing issue. So digesting it a bit, but yeah, it's gonna be an interesting day.
Yeah, I want to get into that because that seemed like a little back and forth because it kind of feels like a compliment sandwich because we were just talking about Nvidia getting some good news yesterday, and then today something else announced, or last night it was. Can you break down what happened last night? What was the news, and what are your thoughts as someone who follows this space pretty closely?
Yeah, so Trump, it felt like what was it, $500 billion that Nvidia was going to invest in AI supercomputing in the U.S. and that was like something that was bullish because then Trump responded that he's going to do something, he's going to help them out essentially. But yesterday, Nvidia dropped a material impact note essentially that there's going to be a $5.5 billion hit in this upcoming quarter tied to their H20 chips bound for China. So, 5.5 billion, that's not that much of an impact. The way to digest that information is twofold. One, it's 15% of their gross margins in a single reporting cycle. So like that is going to be some revisions downward. But also the next part two is like the U.S. has been tightening its screws on China's access for the top-notch semiconductor chips for years. Like first, it came like you can't. There's a ban on the top-tier AI chips. Then there was the licensing requirements. But then Nvidia found a golden loophole via the H20 chips, which was again a neutered version of their flagship GPUs. It was just weak enough to stay legal and just strong enough to kind of meet China's needs. It was that middle ground. That line got moved officially, and we got visibility on yesterday that it's actually happening, and that golden loophole is now becoming somewhat radioactive because there's been no revisions in any of the guidances to reflect this. So this $5.5 billion hits this in Q1. It's it's not because demand is collapsing. It's not because China stopped ordering. It's because there is a red line now in the bandwidth specs, sand, and you can't cross it. So this isn't anything about compute demand. It's purely compute containment. And now the bigger issue is I don't think anybody's safe because the US essentially is, or Trump is deciding that compute is no longer neutral. It's going to be strategic. It's not going to be, I don't know, like the um, US isn't going to be structuring trade policy around like, oh, let's focus on GDP. Like it's going to be focusing around leverage, leverage, leverage. We're in this high stakes poker game. What do you do if you're a poker player? You provide leverage to your competitor on the table to make them fold. So that's essentially what they're doing right now on compute because it's a new form of leverage. It's not oil, it's not steam anymore. It's purely compute, and that's the most strategic resource in the world. And unfortunately, the reason everyone loves Nvidia is the same. It's a catch 22 that now Nvidia is at that choke point because compute is the most strategic resource. And if Nvidia is the kingpin of the new digital economy because of this chokehold that they have, they're going to be impacted and used as that pawn in this ego game that we're playing in right now. So I think that there's going to be more that follow suit. It's not just going to be Nvidia. If your tech moves data faster, if it scales models or enables any kind of inference at speed, which is a lot of semiconductor names that we all love, you're on the board next, and there's going to be revisions. So that's why it's like, fine, it's not just a $5 billion hit. It's something that's saying more about what's coming down the pipeline.
Yeah, you mentioned on X, it's a new geopolitical regime and the goalpost being moved. So this so people understand this is not like a one-time hit. This is the new standard. This is going to be that type of expense every time they're getting those licenses to China moving forward.
I don't think there's gonna be any more. I think it's gonna be cold turkey. Like I don't think U.S.
Okay.
wants Chinese LLM scaling anymore. I don't think they want rival AI stacks being built on American silicon. Like they're essentially telling everyone choose a side. There's no more gray area. There's black and white. Pick a side. And I think this is going to be indefinite. I really do. And I think we'll see what the final agreement's going to be for China and US eventually. But I think this is 100% leverage that's going to be used that might be the pain points for the East to come to the table. But I don't know. It feels very indefinite and it feels like a lost year for the semiconductor names. And you have to ask yourself, like, can we really rally in the market if semis are lagging? And I don't know. They're a big component of the indices now.
Yeah, this thematically ties to a lot of things we've been discussing, and you've brought up about this new age of defense, as you call it, and access to technology, to AI, to the materials that power these things. Choking those off at the source is actually, in this administration's view, tied to national defense, and that creates
Mm-hmm.
conflicts with some of these companies that if you're investing in them, you want them to grow and scale and do that internationally, but then there's these sort of nationalistic ties, and you see this with Palantir and others. I think that's an interesting emerging thing to watch, because I think, to your point, you've been talking about this. This is the warfare of the future. Maybe isn't all going to be on a battleground somewhere. It's going to be cutting off access to some of these innovative technologies, and as an investor, it puts you in a weird spot.
100%. Like this is the new playbook. Like there's not gonna be any kind of bilateral trade tit for tats anymore. There's not gonna be any kind of um globalization. Like, oh, let's all high tide resolve boats. Let's all try to make the world better by making the future a near term reality. That's not the case anymore. Like it's going to be. You can call this deglobalization, and that this might be the beginning of like what's going to come forever, where it's not going to just be about helping each other out, strategic alliances. Like it's going to be about denial. It's going to be about um, controlling who gets to scale AI or who gets to scale quantum, who gets to scale robotics. Like it's not, it's going to be access denial, and it's going to unfortunately the future is going to come at a later timeline because of this. And this is where, like a name of Palantir, like they thrive. Like this is they thrive in chaos, and they provide the flashlight in the dark cave of global crisis, and that's why they're catching a major bid. And you're seeing also like I don't know, the new age of defense is real. Like you have the gatekeeper of the new modern internets, Cloudflare. You have the control center of global safety, Axon, and you have Palantir, the operating system. So those three names, and then you have CrowdStrike, which is the resilience in CrowdStrike post outage is wild. I think they're higher. Yeah, they're at 390. It's crazy. That's crazy to me. Post outage, when their fundamentals are compressing because of that outage. So like those four names, if you look them up, like they're showing a ton of relative strength this year. It's because the new age of defense is very real. Like the budget's evolving, the priorities are changing, and you have to be able to focus on where the world's heading. It's not defense is not just missiles, jets, tanks. It's going to be something you can't actually see, and it's going to be software. And CrowdStrike is just like even as dip, like went from 450 to 390. Oh, so what? It's a very high valuation. It's very high and it's holding strong. So yeah, be aware of it. And these macro driven pullbacks, like they give you discounts on these kind of names. Maybe it's not as much of a discount as you would hope, but if the environment was different, like these names wouldn't be down 25-30%. They'd probably be near all-time highs.
Yeah, it's interesting. Not to get philosophical, but I feel like a few years ago the conversation was around these big tech companies globalizing the world more. In that, when you talk about the metaverse and things like that, like existing within a platform that has no borders, the more we're online, the less physical borders matter. A lot of the conversation was around this dissolution of borders, and now it's like way the other way, where we're way back to it's almost like horseshoe theory, where it feels like some of these companies are intrinsically nationalized by virtue of not being able to work with other countries and regions. And I think that's going to be super interesting to watch. But we're reading the chat too. It looks like a lot of you guys agree with Shay that this is leverage. Of course, we had the 245% tariff news today, and the hilarious report that came out that said China is open to talks if Trump shows respect. Which honestly, that's like me in any argument that anyone I've ever dated. But yeah, I think, A, what are the chances of that? B, 245%. Like, at what point, the memes are kind of funny at this point, but where does this stop? 245%? I remember last week when we were gawking at 140%.
First off, like China really hasn't retaliated yet, guys. If you haven't noticed, like they're kind of like being patient a bit, but things are escalating, and we might see specific tariffs on Apple and Tesla from China's end, and we haven't gone that yet. So things are like they're saying the respect all these like semantic layers of the negotiating table. Like there's gonna be some tangible tariffs that's going to come down the pipeline if this thing isn't resolved anytime soon. I don't see any glimpses of it resolving anytime soon. So be prepared for that. And I also want to go off your previous point on like why are we deglobalizing when everyone said when it's just like 5 years ago everyone was like taking borders down and like kumbayaing with each other. The fourth industrial revolution happened, 2020, COVID, which was caused by the East. I'm not trying to get political, but they withheld some information and the world didn't have the information they needed at the pace it needed to adjust, and COVID happened at the pace it did. But also AI, fourth industrial revolution, like this is something that doesn't happen every once in a while. It's a generational thematic, and because nobody really knows the ceiling of the on this theme, or like what the future is going to look like if this scales, people are going to be like, now it's a zero sum game potentially now, and they're going to be like kind of competitive, where before it was like, yeah, well, it'll help you out because it'll help me out in the long run if we all do this together. Now it's like there's a race, and when there's a race, there's going to be competition, and you're not going to be as free with your competitors in that kind of environment.
Yeah, I want to share this headline too that made me think of like just people not knowing what's coming. Apparently, Apple literally airlifted $2 billion worth of iPhones from India. The airlift is such a like a war term, or like a medical term. They're like rescuing these iPhones, but this shows you how real it's getting with these companies trying to make moves to potentially hedge some of their risk. I don't know if you spotted this, Shy, but fascinating. I mean, 2 billion worth of iPhones isn't that many iPhones in the grand scheme, but interesting, interesting thing to see. And apparently, this was caught in some. Somebody reported this from some data that was like in the back end. They didn't talk about this. It was from some sort of shipping log or something that someone caught it.
I mean, yeah, you're right. 2 billion isn't that much, but it's more of a sentiment read. This is like what Apple's mind is at right now of how to get around the tariffs. Like it's very real. They don't view this as a short-term bluff. They view this as something structural that might be prolonged further than anticipated, and they have to make some moves. And that's what this is. They're not publicizing it yet because it's a strategy move on their end. They don't want that many eyeballs on it. They're just getting started. There might be some F ups along the way. This might not be the right move. They recalibrate. Once it's done, like, was that the right move? Let's adjust. Like, nobody wants to reveal the playbook right now when there's a war, and there's a tariff war, guys. So they're going to be strategic, and I'm sure there's someone in their war rooms upset that this got leaked, and now they probably have to either double down or readjust on how to get around the tariffs.
Yeah, I mean, great reporting. Whoever, I think it might have been Bloomberg who caught that. Looking at logs. But speaking of front running tariffs, we just got some new retail data out this morning, fresh off the press. Retail sales data for March coming directly in line with expectations, up 1.4%, a little better than a lot of people thought was happening. And now the question is, are consumers front running the tariffs, which is to me a really
Totally.
fascinating psychological, like, I don't think I'm going to have money later, so I'm going to buy stuff now. There's probably a whole white paper on that somewhere. But also really interesting. Obviously, Samro is a great follow, but see the breakout across different types of spend. Do you think that's partially the case, Shy? People stocking up. I mean, you just bought a car on an
I was just
accelerated
gonna say,
timeline.
yeah, anecdotal evidence is yeah, I believe that. Like I was supposed to buy a car maybe next month, end of this month. I was like, I'm buying one right now to front run it. Who knows how expensive it's going to be? And plus 5% car parts. I think that's the psychology about a lot of those the demand vacuum that specific category felt. I'm shocked in the restaurants and bars 2%. Uh, maybe it's just actually I can't explain that. I have no idea why that is. Building mats
Could
that
be
makes
like a
sense. I
get
mean,
it while you can kind of. I don't know. Like that's something interesting to look into, but it could be like, hey, I think I'm gonna be broke in 6 months. Let's go to the Olive Garden. I don't know.
also buy maybe everyone's just doing so much buy now pay later. They're more liquid than usual. Like oh let me just or it's just such a shitty environment. Let me just numb myself in a food coma or numb myself via the liquid, uh, liq liquid juice. I don't know.
Wait, that
It's
is
interesting.
actually an interesting point, Shy, of how this data is measured. BNPL. Would that? I wonder if that's counted as like if you buy Coachella tickets this month, does that whole cost hit in this kind of data this month?
Totally, it
So
would.
that's really interesting. I would love to see. I don't know if they have this, like a breakdown of what percentage, because I think it's like around like a decent percentage. I think almost 10%. Well, check me on that. Of purchases are BNPL in the U.S. So that's also interesting.
That's so dangerous. So scary.
Yeah. And on the credit front, the Consumer Financial Protection Bureau, we're rolling back some of these credit card late fee changes that were dropped under the Biden administration. So Trump wants to bring back the higher fees. Again, this is another sort of we've been talking about BNPL versus credit a lot. What is this? What's the impact of this on BNPL? Consumer behavior in general. Obviously, we're a nation in debt. But that was another news item that broke, I think, yesterday. Any thoughts on that,
Yeah,
Shy?
I mean,
You're like, people shouldn't
I'm
spend
trying. I'm
money
bringing
they
it right
don't
now.
have.
Bring. I mean, they shouldn't, but it's. I know it's like that's not the reality of it.
Yeah.
Everyone wants escapism. I wish there was a way of offering escapism that didn't feed into the capitalistic chokehold that you can have with debts. So unfortunately, that is the reality, and it's going to get worse. Capitalism is going to get more brutal. Classes will get more segregated. AI is the accelerator of that, and if we are experiencing this tariffs anytime next year, that will be the straw that broke the camel's back on a lot of consumers because that debt it just continues to stack on every single month if you don't deal with it. And if you're not making more money and you're actually losing opportunities, what then? Like, what are you going to do? That's the scary thing. I mean, nobody really knows. That's why I think that if this is prolonged, this will cause the great financial next GFC. It will. And a lot of people I talk to are way more intelligent than I am in that realm agree. And that's why they're so frustrated that this might be a man-made recession.
Yeah, I think we briefly mentioned India products coming out of there, but I was listening to a Financial Times podcast this morning, and some very kind of harrowing data coming out of India. The middle class there, a lot of credit was freed up after COVID. It's obviously a super fast growing economy, but they have seen the default rates on credit double since 2019. And there's a lot of signals there that show, these people are having trouble paying back what they're owed, and it could threaten growth. And so that's an interesting case study to look at, potentially precursor to where we're at, where you have a growing economy where a lot of people said it was kind of unstoppable growth, and now they're faced with a lot of challenges in their middle class, which has been expanding. So I think that's another interesting to see these trends play out in other markets as well. Um, I want to ask you though, Shy. We like flipping around a million times, but there's so much going on. United Airlines reported earnings. They had pretty decent earnings, but their guidance was very fascinating. They did things a little different. I know when we talked about this a couple of weeks ago, your prediction was people were going to not give guidance. We've seen some of
Hmm.
the banks maintaining some. So far, it's kind of back and hit and miss depending on the industry. But United actually offering a multiple scenario guidance, which seems like no guidance at all. What do you make of that?
I mean, corporate strategy, I always uh, offer an aggressive and conservative assumption when I do anything strategic to the C-suite. Usually, it's a back pocket item for them, just so they can create a narrative when they get a question from an analyst on what their sandbox of risk is going to be. That's what I was trying to reference before, where like we have no idea. C-suite has no idea how to what range of risk they should factor into any kind of guidance. They just don't. We got some glimpse of that last week that all right, 10%, 20%, it's not going to just be a blanket approach across the board. That's just going to be made up numbers week after week. Now you're seeing United, which is airlines are very vulnerable to consumers' discretionary spending. It is. They're providing, they're not just like keeping in the back pocket, they're communicating what their conservative and base and aggressive case is. And I don't love that strategy. I think it's kind of dumb because the way I come up with my assumptions for the conservative guidance when I communicate it to my leadership, it's still an estimate. So that's why you don't usually communicate it now because everyone's saying, all right, that's the worst case for United, like worst case. We still don't know how things are escalating in the tariff war this time next month. And now they're telling everyone, giving everyone a floor. But if
Yeah.
that floor gets removed this time next earnings cycle, that's when spiraling occurs, and that's also when confidence gets lost in management that they don't really know their risk parameters, and that's going to be detrimental. So like I don't see any. I think the risk outweighs the reward on what United does, and I don't think that's going to be the common theme this upcoming earnings cycle because they're sticking their neck out even more by providing a floor on what the worst could be.
I didn't think about it that way. Yeah, it's like one thing to miss conservative slash aspirational goals, but to miss the worst case scenario is bad. And yeah, I
Hmm.
wonder what the. I mean, you're in these rooms. What that conversation was going back and forth on the pros and cons. They must have determined that there were reasons to do it this way. But you're right that like you missed the floor. Ugh, not great.
I mean, I think I honestly think it's because they think their stock is so undervalued. Like I'm seeing right now they're trading 7 times earnings. They're like we maybe they think like there's no reason we should be trading at 10 times earnings. Let's provide let's relieve some heartburn by telling them what our worst case scenario is, and that's gonna now we're gonna have an earnings multiple in our worst case scenario, and you see it's so undervalued. It's like oh this is undervalued. Let's bid it up a bit. That's a double-edged sword. We'll see if that works for them. If they're essentially betting that this tariffs is going to work itself out in 3 months and it won't get any worse, and that's risky. It really
Yeah.
is.
In the data, they're saying the international and premium revenue actually rose. So I guess that's good. The people with means, I guess the business class, that hasn't been pulled back yet. But as we've talked about multiple times, that will be the first thing to get cut, at least on the business front. But the domestic coach sales dropped, and that's where you see, the Main Street impact of people pulling back. But also it's fascinating. This data exists alongside the data that we just talked about of retail sales going up and front running experiences. And so it is interesting to see sort of the consumer psyche as they're making sense of all this. Where are they pulling back? Maybe they're canceling trips and going out to eat more. There's a lot of different scenarios that are playing out. But I think this is, as you've said, Shy, this is like a trend to watch in the upcoming earnings cycle of like what are people saying, what are they not saying, and how are they approaching guidance. We had someone in the chat. I asked about like kind of what people were looking at upcoming earnings. Be making money, who appears to be a very big Howard Lutnick fan. That is sarcasm. If you're in the chat, you will get that joke. But he's bringing up Microsoft. They report, I believe, next Thursday. So they're reporting Thursday on the same day as Google and Intel. We also got next week Boeing, Ford. Any of those? What are you looking for in those tech, especially like Google and Microsoft? Shy, as we head into next week, what will you be listening for or looking for in those particular earnings?
So I'm not a fan of Microsoft. You guys all, I hopefully you guys are all aware of that for me. But regarding my tariff goggles, they're safe. They're a little bit tariff proof because their contracts are so locked in long term that it won't really adjust as much. It's very B2B. It's enterprise, but the business spending isn't consumption based. It's literally contract locked in. For Google's, the Metas, the Amazons, they're they're the middle tier of like oof, like they're it might hit them really hard initially because that consumer exposure that they have, that's going to clearly be softening due to these tariffs. However, you're going to see the infrastructure layer across all those names. That's hardening. Like that's they're investing in that this year, and that's going to bear fruit. So you don't know if what the one-to-one correlation would be on the headwind from consumer side and the tailwind from the infrastructure side. But the consumer side, you can make the argument that it's short-lived. One tweet can change that, but the infrastructure side, that's something that's there's longevity in that. So I think they're going to be just. I want to say they're going to be just fine, but as soon as one of those names show a massive weak consumer weakness, it's going to snowball and it's going to spiral a bit. So I think among those names, I think Meta's the safest, most likely. And I think Amazon, there might be some actual weakness in the consumer side of their business. I really do think so. And we'll see if the infrastructure side makes up for that weakness. I don't know. It's that's why this earnings cycle is so polarizing because it's not going to be just one bucket doing well. Like every company's going to have a nuance, and that's why it's so important to listen to CC, read the narrative on what the management's saying, find out what's impactful, what's BS, what's noise, because it's going to be a very noisy earnings cycle.
Yeah, I think the side stories are going to be interesting. I'm Satya Nadella. I think is incredibly intelligent and competent. I'm curious just what he thinks about what's going on, and then it's like the delta between how they assess the situation and what they feel comfortable saying on the record, knowing that a tweet could literally blow up their share price or their day, however you want to put it. So I'm fascinated because that's what I'm listening for in a lot of these. It's like, what is their assessment of what's happening and what's going to happen, and how are they framing it, and what are they saying and what are they not saying? Because it's a lot of euphemistic language and kind of talking, but it's a lot of fundamental change, seismic change, the economy. Like people think something is happening that is going to fundamentally change things, but it's like nobody knows exactly how yet. And that's going to be interesting. I would love to hear from the big tech players, and of course with your Facebook and your Meta and your Googles, the advertising. What did the advertising look like in Q1, and then how that's going to be on the look back. We've been talking about IPOs a lot. In IPOs, we talked about the slowdown. We had Chime, Klarna, eToro all pulling back. Then like Webull had like the sneakiest IPO ever on Friday. Like I literally talked to 20. Did you know anyone who knew about this?
No, and I also want to say like there's a reason they did it on a Friday. It's low volume, liquidity is going to be easier to squeeze. It's not a good thing the way they did it on a Friday. They're trying to, I don't know, people corporate strategy hat on. You drop news on Friday to at least control a narrative, manipulate something, or people are off the screens. Like let's just drop this bomb, and hopefully it diffuses over the weekend to some new news cycle. So I think they're controlling a narrative of some sort or like manipulating like, ooh, like Friday it's low volume, we could potentially squeeze due to like a lot of people off screens. This has no place to be worth um I don't think they're worth 600 million. I don't know, but I don't know how much they're worth now, but like it's just reeks does not pass my sniff test what Webull is offering and
Yeah.
what how they're doing it. It's like why are you doing it that way? What are you trying to hide? Like
I don't.
just go
Yeah.
the normal route.
Well, they're interesting because this is. Oh, there's the opening bell. Let's wrap this, and we'll get into a check-in. But I think Webull's interesting because they're a Chinese company with a U.S. operation. This is the U.S. operation kind of spinning off as a SPAC IPO. I believe the Chinese operation is owned by Futu Holdings. That's FUTU. Um, oh wait, no. never mind. I misspoke. That's Moomoo. Moomoo is owned by Futu. Sorry. But yeah, this is like the U.S. side of their brokerage. So I think, yeah, it's what a meme stock though. What a ticker. What a meme stock. Again, like all these places where you could actually invest in the company that's tradable. Your Robinhood, your Coinbase. I think that's very interesting, just from a retail investor standpoint. Let's check in and see how things are looking in the futures. Looks like they're sliding a bit. Shy, as you always point out, Nvidia is really just bringing everyone down.
It again, like I think it's really a sentiment read on what might be coming down the pipeline. The new compute's going to be the new source of leverage, and so many people are exposed. So many stocks are exposed to compute now because we're in the fourth industrial revolution. We're just getting started, and that's the spotlight of the stage one of it. So, um, I think that this is the beginning of something more. I think that this earnings cycle won't be the savior that people are hoping for, expecting. I don't want to sound like Grinch. I'm just being a reality of like, I just didn't think this earnings cycle would be the tailwind that we were hoping for. It's going to be somewhat of an anchor. And if Nvidia's getting impacted by this, what do you think the 90+% of the other names in that space are going to get impacted? They're going to be like, when the king is saying like, oh, like we're suffering a bit. What do you think that not the peasants, but like the societal,
Plebeians.
yeah, exactly, are going to experience? Like if the king's not protected by this, like who can be? Nobody. And
The
that's the
peasant
fear.
thing is actually funny, Shy. I feel like there's word is being thrown around like China called us peasants and then Vance called Chinese people. We're just calling each other peasants. I don't know if you caught this. The argument is just spiraling to the point of entertainment. But they're like, no, you're a peasant, and then we're like, no, you guys are peasants. It's like, well, maybe we all are in our own ways. I digress. But yeah, the Dow, to your point, tech's taking a bigger hit. Down, Nasdaq down about 1.7%. The Dow down 0.4%. Flipping back to IPOs really quickly, I did spot. So there are a couple news items coming out of, again, it's like whiplash, but now some people are going to go out. So apparently Figma filed a confidential S1. That is a Adobe Photoshop competitor. Very high growth startup, beloved by tech. It's known for being very lightweight, intuitive. It's cloud based versus Photoshop, which is typically software based. Very big community around it. A lot of love for this company. I believe they were going to be acquired by Adobe at one point. Producers, correct me if I'm wrong, and that fell through, and now they're going off on
Hmm.
their own. So this kind of goes back to Shy. You probably want to see like, okay, what's their moat? But this is interesting because this is, consumer tech, and you saw Chime back off, you saw Klarna back off. Why would these guys decide to test the waters now?
So I think Figma is great. It's high quality. I think that's why Adobe tried acquiring them, and it failed for I forgot what reason. But also, you need to think about why are they're not rushing it, but like whoever goes IPO in this environment, there's a reason for that. You need to um, have that tin hat theory on. Like if you're a that's why you're seeing fintech companies out there, because it's a commodity of an industry. They kind of, if we're entering a recession, there's no way they can go public. So they kind of want to beat that rush potentially, because that space gets affected from recessions. Figma, I think it's AI might. There's so many AI tools now for Photoshop, video editing. Well, I forgot what the ChatGPT version is even.
Mm-hmm.
No, Sora, Dolly. Like there's
Yeah.
all these features where like that's what Adobe's narrative is, and why that train's so cheap is because I don't know if this is a commodity now all of a sudden. Their users, the hyper users on Adobe, on Figma, they love those tools. Like they probably won't leave. However, the scalability now might be impacted or anchored down due to all these tools being available in other ecosystems. Like you don't know if this needs to be a standalone business anymore. I'm not saying it's going to be like a Zoom or a DocuSign, but those are good case studies of how when your product becomes a commodity, what are you left with? you're a dead stock. You're too big to get acquired. You're still making money, but you're not growing at all. You're just stuck in mud.
Yeah.
That is all. That's going to be the fear in C-suites, like the Figmas out there, the Adobe. I mean, the Canvas, or like these private stocks. Like that's why I think Figma's accelerating this IPOs because that is a narrative. I don't know how much of a reality it is, but if it becomes a reality and we're in private markets, we're going to be screwed. But if you're in the public markets, at least you can sell your IPO shares, the insiders, and you can make some money in the immediates and not be holding the bag in the private markets if it does become a commodity. So
Yeah.
that's my 2 cents on that.
In the Brandon community, I even see in the chat someone was like, anything to get me off a Photoshop subscription. I've heard this so many times. In fact, Adobe tried to join Blue Sky, which is the X competitor, and I forget what their first post was like. What's up, guys? And everyone was like, "We hate you." Like they literally got shunned. They had to leave the platform. And I think that's to your point about like what modes look like, and there's Gen AI tools. This Figma has really embraced the design community and really empowered them, and this is why people are choosing them over Adobe. If you look into it, there's a lot of criticism about Adobe, like using people's designs to train AI. They've lost a lot of trust with the design world, and so I think Figma is smart to embrace them, empower them. But yeah, it's how long does that brand mode stay? We've talked about Nike a lot and Aloe. There's going to have to be other innovations there. But yeah, I thought that was an interesting that just like came up on my feed. I was like, oh, they're going out. And then I was curious to see if there was anything else in the mix. And there is a company called Aero. I don't know if you've heard of this one, Shy. AIRO, which is an aerospace and defense tech company that is getting ready to IPO. And that one makes sense based on everything you've been saying.
Yeah, I mean, guys, the information like the world is changing so quickly. Like you can't just be backwards looking. You need to ask yourself like what's going to change. Once you see these like, new innovation tools being available, you have to ask yourself like what's safe, what's not, what's going to change. I haven't seen this Arrow one. This is my first time looking
I had
at it.
never heard of them.
Uh,
Yeah, go ahead.
no, it looks interesting. So it looks like a Canadian aerospace and defense company.
Yeah.
Uh,
One
me-
flag with them I saw
Cancer is
was,
backing.
yeah, they had 2024 87 million in revenue, but two clients account for 72% of that. So that's one of those read between the
And
lines.
I'm sure one of those clients are government related
Yes.
agencies as well. So
Yeah. But to your point, if you think the TAM of government spending is expanding into places like this, interesting to look into. But yeah, I don't know anything about these guys. I always like to go on the Renaissance IPO website and see what's popping, and I spotted those guys. So yeah, some IPOs are pausing. That made me think. The Figma thing too made me think. Oh man, is like Chime now questioning their decision? Is Klarna can't keep going back and forth, but I wonder how they feel about their decision now versus when they made it, 2 weeks ago.
mhm.
What are you gonna
I
do?
mean, yeah, there's nothing they could do, but 20, yeah, they missed their window to be honest. So they're trying to get back up on it. I'm looking at the market right now. It is stabilizing a bit. But you know what's interesting? Guess what's so QQQ is down 1.6%. Guess what's green? CrowdStrike and Cloudflare. New age of defense. It's very real. That's not going away. IWM might be going green too, which is very interesting. It's about to go green
When are
actually.
their earnings? Oh no, that's Intel next week. Yeah, let's see what's going on with IBM.
So so it looks like that screams to me a rotation, but I don't know why there's a rotation in small caps from big tech, but maybe there there's a read through like big tech isn't safe clearly with Nvidia, what's happening to Nvidia, and once China retaliates on their own tariffs with Apple and Tesla, like it just reiterates like we might get some revision like earning compression due to the tariff aftermath. And if we do, big tech is the most vulnerable because of the multinational exposure that they have in their business. And small caps don't have that multinational exposure. They're usually hyper specific in the market, hyper specific on a niche, and that's somewhat shielded from a whole bucket being affected from this tariff stuff. There's going to be specific ones, like if you're industrial, if you're an EV company, if you're an AI company, you will get impact small caps. But there's a lot of small caps that aren't that at all, and maybe that's why it's game rotation. Snowflake's green too. Interesting.
Hmm.
Snowflake is a somewhat of a data security play too. So I don't know. It's big tech is not where you want to be today.
Yeah.
So
Unless you're in the
that's
new age of defense, which
yeah.
I think
Let's do
we should
new.
put that on shirts and sell them. Let us know if you would buy that. I would wear that. Looking at what's trending on Stocktwits, looks like AMD's down 5.5%. There was some earnings out of ASML this morning that were fairly bleak. They missed order expectations by quite a bit and issued a softer sales outlook. Their CEO saying the tariffs are creating a new uncertainty for the economy and the market. Similar trend there. They were down 3% in the pre-market. Check in where they're at now. But yeah, it is, to your point, it's interesting to look at where the green patches in all of this and why.
Yeah, I mean, I'm. I was gonna say I'm a little shocked that ASML provided guidance, but not. I'm like, maybe I'm not because it's such an expensive machinery that like it's not as the velocity of the ins and out isn't as impactful as like, the other semi names out there. But I do like
Hmm.
to see like they provide guidance that they maintain their 2025 guidance. Their near term got it was a really weak guidance near term. Gross margins were pretty stable, which is great to see. I think China is now 27% of their system sales, where before it was I think 40%. I think that they're now anticipating China to be only 20% in the full year 2025. So you're seeing that geopolitical risk kind of start diminishing now. However, that's not what you wanted to see if you're a semi bull, like semiconductor bull. Like it was noisy and it was pretty bleak. And I think it's really indicate it's a good pre-read on what this earnings cycle might just be of like it wasn't good, but it wasn't the worst. Party will continue. Like just keep doing what you've been doing trend wise. Yeah, I don't know.
Yeah.
ASML is a tricky one.
Yeah. I'm also flipping around. I see Interactive Brokers down almost 8%. They had earnings yesterday, which I was not following at the time. It's, of course, a large heritage brokerage platform catering to a, say, higher net worth but large audience. Looks like they had some margin impacts, but they did say that customer growth and daily revenue was up. My question was curious of potential uh, loss of customers to your Robinhoods and other places, but looks like they just, yeah, they had a miss, and this is the market reacting to that. Have you ever used this product, Shay? I feel like this is like a sophisticated brokerage for
I
sophisticated
haven't.
investors.
It is. I don't trade that much. If you're a trader, you should use this because you can also like you can short a lot of stocks on there. You can buy a lot of foreign market stocks on there. So like those are like really the levers I think for IBKR that they pull. For me, I don't trade that much in and out of my
Yeah.
portfolio. I have my holdings, or almost all of them are from Nasdaq or NYSE, and I just don't feel
Yeah.
and the UI is not like sexy enough for me, and I love UI. It's easy on the eyes for Robinhood, so yeah, I don't use it, but I know a lot of people who do, and um, wow, this is my I'm just like watching the market. It's just like QQQ is down 1.7%, but like all my top five positions are green. Cloudflare, Snowflake, CrowdStrike. So there's a weird rotation. I'm trying to find news on why there's a rotation over here, but like
Do you think
CrowdStrike's
so?
up 3%.
Wow. I mean, on that note, Shy, in a year, like the Mag 7 as we know it, like who gets replaced by some of these names that you think are more in these new areas of tech? Do you think that's something that could happen?
So I don't know if you saw the Fox Business segment I did 2 days ago, but
Oh,
that was one of the segments I said. It was he asked me what my thoughts on the Mag 7 is, and I coined this new term, which is the new Mag 7 and AI's next era. And those names are like the CrowdStrikes out there, the Palantirs, the Cloudflares, the Snowflakes. Like these are names, the new Max 7 of the AI's next era, where they're laying down the infrastructure for the applications being built on top of all the AI hardware that's being had right now. So I referenced it during the dot-com era. All the attention during that dot-com era initially was the infrastructure, saying the groundwork of the structural arteries of the internet, the Verizons, the IBMs, the Ciscos. Were those the crown jewels of that era? No. What was the crown jewels? It was the marketplaces that are built on top of the internet. Amazon's, Google's. Same thing is going to be happening in this AI fourth industrial revolution where crown jewels won't be the servers, GPUs, the compute. That's just laying down the groundwork for what the crown jewels will become, which is the application being built on top of it. You can make the argument that, fine, Nvidia, they're the crown jewel of this era. I agree, but they're not a hardware company. I've told you guys this multiple times. They're a full-on ecosystem where their software component is just as sexy as their hardware component. Palantir is the stage 2 AI winner. They're a mega cap or again right company right now. Again, very close to, I think it's 220 billion, but they're close to it. They were what, $30 billion a couple of years ago. They're cementing themselves at the stage 2 AI winner. Then you also have, that's the intelligence layer of this next stage. Then you also have the data backbone of enterprise AI for Snowflake. Then you have the gatekeeper of the new modern internet, Cloudflare, where I'm calling them like they're the AWS of this era. Like what AWS was during the cloud era, this is what Cloudflare is becoming. And you're seeing them show a ton of relative strength, even though their multiple is just through the roof. Their workers product has momentum. And I think people are violently underestimating how vital latency is going to be in the agentic AI world about to enter. And Cloudflare has a monopoly in what they do as a content delivery network. Like really nobody else does what they do. They have that monopoly, and it's going to become the AWS of the new modern internet. And you have CrowdStrike. CrowdStrike's the closest thing you have to an all-in-one cybersecurity platform out there. There's no one even close. So you can make the argument, fine, maybe Palo Alto might be, but Palo Alto has to acquire the latest and greatest in order to keep up in cybersecurity. CrowdStrike doesn't have to do that. They literally everything they do is organic. All the new modules that customers adopt is them organically creating that themselves, and their endpoint solution that they have in the market is by far the best, and it gets people in their ecosystem. And once you get into their ecosystem, they just upsell you on these new modules that they organically create themselves. It's a genius business model, and agentic AI is about to explode. What do you have to do with that? Data. Data is about to explode in agentic AI. You have to protect it, and CrowdStrike will become the all-in-one cybersecurity platform where they shut the world down for a couple hours. What do they do for their stock? Nothing. That's moat.
Yeah.
Gut check moats. So yeah, the new Max 7 is real. We rarely get geopolitical, macro-driven pullbacks like this. So you got to position towards those names, or you'll miss out potentially. It doesn't matter if valuation's up there. It's always going to be up there, to be honest.
Yeah, and going back to your initial point, we kicked off the show, that new Mag 7, the US is going to want a stranglehold on those companies. They're going to want to control who they're working with to some degree and cut them off. And that's the leverage you were talking about, right? Cutting things like that off from the East in this new modern quote unquote war that we're fighting. Would you say like all of those names you listed, they would be, those are all like somehow tied to national security at this point in your view?
Almost all of them have level 5 or level 6 security, Fed-wise. I think Snowflake actually just got level 5 last week. But yeah, 100%. I mean, Axon, we talked to Howard about this just like on Monday. The public safety is going to become more of a hot topic, unfortunately, the way the world's trending towards. And you need to kind of sandbox all the madness. And the way that sandbox all the madness is becoming the control center of, oh, what really happened? That's what Axon is. That cloud ecosystem they're building around their hardware. That is like the jury and the judge. And that's really, really important in the future we're about to enter. And we're using humans essentially right now, but that's not the future. Future will be robotics, It's going to be drones. So if you're the control center of public safety and you're using humans right now, you're these police stations are going to be using them once robots are policemen, or like once they use drones for public safety. Like it's just a synergetic, way easier. And guess what? The budgets are going to become much, much more reasonable once they don't have to pay humans to become cops. It's just robots can patrol 24/7, drones can patrol 24/7. So now you're telling me that the data or the videos that are going to be used to monitor society is going to amplify drastically, and it's going to be stored into a cloud ecosystem that Axon has that will be printing money because of it. So that's like, there's just so many fun angles, right? I shouldn't say that's fun because that sucks. The public safety is demising, but there's just really a lot of interesting angles out there that isn't just Lockheed Martin, Raytheon, or just the Max 7, like the traditional Max 7 names.
Yeah. The robotics is fascinating. I don't know if in New York, there's a publicly traded robotics company that did a partnership with the NYPD called Nightscope. Their stock is not doing so great, so definitely look into that, research that. But this was a couple of years ago, and it was like this 500-pound roving like R2D2 kind of thing. And then you see now with like these robot police dogs. So that's the speed at which this stuff is moving. But you're right; it's kind of going the direction of that. And also, I interviewed the CEO of Cooler Labs for Stocktwits. That was out yesterday, and they're developing robotic exoskeletons to actually assist with people doing manual labor. So one of the use cases was if you're a nurse, it'll make you stronger. It'll take some of the load off when you're picking things up. There's handles for patients to grab you with, very Iron Man-esque. But I think to your point, that's a really fascinating pocket that is still in the early innings.
Yeah, there's gonna be a lot of fun movement in the future. You have your finger on the pulse because things will change quickly, and there's gonna be some like in 5 to 10 years, like whoa, like that's $1 trillion company now, or a mega cap company that was a small cap or mid cap that was so obvious. Like why didn't I see that? Those moments will be happening in the next 10 years.
Yeah. Well, we're about at time for today, Shay. I want to ask you one more hypothetical question before we get on with our days. I don't know if you saw Rory Gilmore's from the Gilmore Girls. Rory McIlroy, his prize money was 21 million. I'm curious. Someone gives you $20 million cash right now. Like quick take. What are you doing with that in this market?
In this market, I
Like
would
right now.
be right now. Interesting. I'd be probably buying Snowflake. I'd be buying Amazon. I'd probably be buying. I'm looking at my list right now.
And you have the option to keep some as cash too.
Oh yeah. So I'd probably keep 50 to 70% in a T-bill. Get that 4%,
Yeah.
and let me self figure. If I had no knowledge of the market, that's a good question. Like if I had no knowledge of the market, I'd put it all in a T-bill and get 4% right now, guaranteed, and figure out what I want to do going forward.
But you'll
And what
space them out with the T-bill and then into your high conviction.
exactly,
Okay.
100%. I would not
Interesting.
buy real estate. I know people like love real estate. I just don't. I don't see the angle of why. It's just I really don't. I don't like to leverage myself, and I think as a real estate investor, you need to be able to leverage yourself, and I just don't like the anxiety.
Yeah. Well, let us know in Stocktwits on X. Our handles are here. What you guys would do with that dinero, which is a fun exercise. And we will be back tomorrow. Like, there's a Fed comments today. There's going to be a lot more news to report on Netflix earnings tomorrow. So be sure to tune in 9 a.m. Eastern on X, YouTube, Stocktwits app, and we'll see you guys tomorrow morning.